All right, good afternoon, everybody. Event Trader here, just taking us through the end of the day, and Scott is going to be joining me shortly, and we're going to take a look at some of the key events that we should be looking out for. I got a few earnings to talk about here as well, so just wanted to get everybody situated. We see that S&P is breaking out. We were talking about it yesterday. I attempted to take a play in it. It was obviously a little bit too early, but now we're getting a squeeze above that 2800 level and seeing arguably the most significant move above this level since we saw the testing start, and that was a couple of months ago. Of course, 2800's really been holding us in check now for since March, ever since we broke below it. So good to see us getting a move above. I think certainly that Netflix move has been has caught a lot of attention. Just from the idea that if people are willing to jump in here and buy on any dips, not a lot of people are going to want to be looking to sell, and we see that activity. Netflix has made recovered about 60% of its losses here as it gets back to that 381 area. It was, of course, trading up at 420 a couple of days late last week. We saw it slide down to the 400 area ahead of the print on concerns about a miss on subs. That concern certainly came to fruition, and we saw the stock get hammered down to that 340 area, but held to that level and is now bounced back 40 points to get up to that 381, where it is seeing a little bit of resistance at the moment here, but overall it was positive for the markets and enough to get people enticed into jumping back in, it seems like, and to get in ahead of some of these other earnings. Be curious to see if we can continue to see that activity of buying on poor reports, because Netflix certainly had that, but obviously it was enough to entice people. Now we're getting a little bit of a late move here, breaking us up to that 2815 area, and we're at session highs. Positive for the markets. Taking a look at the NASDAQ here, we have that at session highs too, as it's rolled up to that 7430 area at the moment. This is also marking a all-time high in the NASDAQ in the NQ futures, of course, and tech continues to be a strong space despite the Netflix move. In fact, I got at the moment, tech up, the XLK up 0.61, which puts it only behind materials, which is up 0.89% on the day. That's, of course, the XLB. Some other stars from in today's action. Take a look at healthcare, up 0.55. We got J&J out in United Healthcare getting us off on the right foot there. Lower expectations for the healthcare, but that also could certainly help drive us. And with healthcare and tech being the top two sectors today, it's worth noting that that also makes up 40% of the S&P, so certainly positive moves there. We also have staples breaking out to a multi-month high here as it hits 52.96, well on its way to hit that 200 SMA at the 53.50 area. Financials continue to be a laggard. They are up. They're starting to fight their way through some key resistance here, and just in this XLF we got it peaking above the 50-day moving average of 2750, but then we got that convergence between the 200 and the 100-day moving averages, which just sit up at that 270.69 area and 270.76. So if we could get financials through that, then the S&P certainly will have a nice tailwind on the charts behind it. But we're going to turn our attention now to what we should be looking for over the next 18 hours. Certainly earnings are going to be creeping up into a little bit more focus here. Those Netflix results caught a lot of attention, but probably the bounce caught a little bit more of that attention, and we'll continue to watch reaction to results here. First, we're going to take a look at the macro, though. On the macro side, oil data will certainly be in focus. The weakening in oil prices has been something of note here. We did see a bit of a bounce, just going off the UWT here, and it dipped down at 32.40, but bounced back up to test that 40 level where it's running in a little bit of resistance. This is, of course, in front of the data. The API numbers will be getting out in about an hour's time, and then of course we'll get the EIA data out tomorrow morning at 10:30 a.m. So collectively we'll certainly be reviewing those results. We've seen some pretty big draws over the last couple of weeks, which has helped provide a boost to oil prices. I'll be curious to see what kind of numbers we get and what kind of reaction that we see in the markets. In addition to the oil data, housing will be in focus. We saw the NAHB housing survey earlier today come in a little bit light of expectations, but it was flat quarter over quarter. Tomorrow we're going to get, of course, the weekly MBA application numbers, as well as our look at the June housing starts and building permits. The XHB was not really affected at all by today's NAHB survey, despite the miss, as it was able to rally to 41.15, marking a two-week high in the XHB and fast approaching on a test of its 200-day moving average at that 41.55 area. Certainly some of the mortgage data we've seen out of the banks has helped provide a little bit of a boost there, and the XHB is trying to climb out from this pattern in the 39.41 area with a break above, but it does have some key resistance sitting in front of it. Also, we're going to be getting the second part of Fed Chair Jerome Powell's testimony. His testimony went pretty well today. Obviously, we're always going to get Senator Warren disappointed with the direction of Dodd-Frank, but outside of that, it was a very cordial meeting between Congress and Fed Chair Jerome Powell. And we've talked a lot about that, about how he's done a lot of work getting out on the PR front and really pushed ahead and built a relationship with a lot of senators, which obviously paid dividends in today's meeting. Overall, we had talked a little bit about perhaps a little bit more dovish tone, given the commentary around inflation and the fact that I made some comments that made it seem a little bit more transitory in nature, and also the fact that he would like to see wage data pick up, which suggests that they could be comfortable with inflation running over the 2% level. But overall, really not a change to the narrative. I didn't really see anything that has, we're still kind of caught in the middle of 3 or 4 rate hikes, and really that's going to be data dependent on how things come in the second half, and of course how trade has the potential to impact the economy and what sort of feedback we get from that. So we will get further comments from him as he goes in front of the House. The House tends to be a little bit more, colorful in their presentation. I guess we could put it a little bit more livelier, if you will. So there is that aspect of somebody perhaps being a little bit more aggressive in tone or animated. So we'll continue to monitor that. But in terms of commentary, I wouldn't expect Mr. Powell to really move too much at this point, and it should be a non-event. Perhaps of more importance could be the Beige Book at 2 p.m. tomorrow, where we will get some insight into the Fed's outlook as we approach their August Fed meeting. The Fed is not expected to move in that meeting, so this should be relatively uneventful. I'm going to keep a close eye on any commentary around the pricing pressures that we're seeing, because that was certainly one of the more notable items from the last Beige Book. So that's what we're looking at on the U.S. front. Moving over to the international side, not a lot on the docket. Inflation will certainly be one of the top subjects that we see. We're going to first start off with the Australia leading index number, which is set to come out at 8:30 p.m. We already got the RBA minutes and the central bank decision, which kind of highlighted where they see the economy, and it's certainly performing well. Not seeing a huge impact from the trade battles that are going on between the U.S. and China at the moment, at least on the bottom line, perhaps on sentiment, but this leading index number should point to a healthy economy for Australia, which should lead to expectations for a rate hike at the Reserve Bank of Australia and perhaps some strengthening in the Aussie dollar. So we keep an eye on that one. UK inflation data is due out at 4:30 a.m. We'll get the CPI, the producer price index as well as some home prices and retail prices. So a complete report card on inflation in the UK. In the Eurozone, we're going to get a revision to the CPI numbers. The prelim for the headline was plus 2% year over year, and the core was plus 1% year over year. And that will do it on the inflation front. And then we'll get a German 30-year bond auction, which will be interesting because obviously it's always a risk haven there. So we'll get a little bit of a gauge on the risk sentiment out in the markets. The prior yield was 1.06%, and that, again, is for the 30-year, which just kind of highlights how low the rates are out in the EU when that's running at about 30% of what the U.S. rate is. And the big cover for this was 1.2 times. So we'll continue to monitor that. But that's pretty much what we're looking at on the macro front. So now we're going to jump over and take a look at some of the earnings here. Scott's going to pop on, and we're going to take a look at the fundamentals and the charts as well. So, can you hear me?
I can hear you, Gav. Can you hear me?
All right. Yeah, I think we got it going now.
Oh, you did? Okay. All right, I'm not even asked what the problem was.
Yeah, and apologies to the users out there. There's just a little bit of a technical issue on our side, but I think we're good to go here.
Yeah, this thing is so temperamental.
Yeah, so.
All right.
All right, so let's get rolling here on some of these earnings. What do you say about that, Scott?
Yeah, finally. Sorry about that. Anyway, before we start, I do want to highlight, you did mention the XHB not really getting a good reaction this morning, but I just posted a column under the swing head ticker just showing the ITB. Now, the ITB is up about 3% off its opening, and I think that's probably the better one because the component that's weighing down the XHB is Whirlpool, which I believe is like the second or third most heavily weighted component in the XHB. And were you out earlier in Whirlpool giving a little bit of a warning?
Yeah, there was a report that their monthly revenues were coming in light, which would have been the second month in a row. But I didn't say that the XHB was weak. I said that it had a nice reaction. What I was talking about is the NAHB survey. So yeah, no, I was pointing out the strength in the XHB despite the weaker survey data. I mean, it was pretty much in line. It was just a little bit light.
I gotcha. When I compare the two, ITB and XHB, a lot of the components are the same. It's just the weighting that's a little bit different. But I went after the ITB here in the column. I think it's one to keep on the radar. Obviously,
are you still in the XHB?
I am not. No,
you're not. Okay.
But I think I might go back into the ITB if this proves to hold up today's move. Year to date, it's obviously been underperformer, but if you look at the column, the seasonality on the ITB, it tends to struggle during Q2, during the spring, and you definitely see a pickup in August and then in the latter half of the year, performance-wise against the S&P. So I kind of like this pattern that's been developing here. In my opinion, if they were going to take this thing down, they had multiple opportunities to do so the last couple of weeks, and instead they just kind of stabilized it. So I think it could be potentially turning around here back to the upside.
Yeah, and for anybody looking to follow along, Scott is mentioning that 1532 comment, which is under the ticker symbol swing, and in there he goes in a little bit more in depth into the ITB. Yep. So, okay, so moving on. First company we're going to take a look at here is ADTN, ticker symbol ADTN. I was just interested in this one because it looked like that they were possibly finding a bit of a bottom here in that 14 to 15 range, and it could be ripe for a nice breakout if they're able to provide the type of quarter that somebody would want to see in terms of a breakout and a turnaround. So definitely want to have this one on your radar alongside another semiconductor company, of course, are in the computing and graphics area. So a little bit of a read-through here for AMD as well as NVIDIA, of course. So a name that you're going to want to have on your radar for tomorrow morning in terms of how it's going to react and whether or not, some of these bottom feeders in the NASDAQ area start to see some bids coming up given the high performance of some of the other stocks that we've seen, of course, and some of the questions around valuation. The 200-day moving average at 1781 is something to keep an eye out on. So, Scott, what are you looking at? I'm going to go put this chart up and you tell everybody what you're seeing on the chart here.
Yeah, I mean, at first glance, they actually have a nice rounding base going on here the last couple of months, actually year to date. So definitely an out of favor stock. In fact, I would say this is actually a Tech T type of stock. This seems like the kind of stocks that he goes after. I don't know it from a fundamental perspective at all, but I'm pretty sure that he tends to, if you ever look at his charts and his picks, he definitely seems to like the stocks that have been crushed, left out of favor, start basing a little bit, and then potentially turn around. So if this thing can clear $16, I mean, definitely that's going to put the 200-day moving averages into play and maybe make it a good turnaround candidate. Are you there, Gav?
Yeah, I'm here.
Did you catch me when I said this looks like a Tech T type of play?
Yeah. No, it definitely would be. I'm trying to think. I think it was Finisar that was a looking chart that we had talked about a couple of weeks ago. Curious, I haven't followed up on that one in a while, but that one kind of broke out here. It's bumping into resistance at the 200-day, but it's a similar looking name that we've talked about in the past to this ADTN. Now, obviously, different spaces, but a name that you're going to want to keep an eye out on for one that's probably a little bit fairer valuation than some of the other names. Next up, we're going to move into the transportation space with CSX. CSX Corp, which is, of course, one of the bigger rail companies out there. There's been some high expectations on this one, given some of the early traffic trends that we've been seeing in rail, particularly in coal. But there are also some concerns about higher diesel fuel prices, which could impact the bottom line for this company. So it's going to be a balance between revenue growth and managing costs. But there's also talk, of course, about the dreaded double top around the 67 area. Can't say that I'm quite seeing that as cleanly as some others, but something that other people are taking a look at, Scott. So I'll drop this chart up here, and why don't you walk people through and tell everyone what you're seeing on it.
Right, sure. So CSX, believe it or not, I was actually swing long this one back in early May. If you look back at the last earnings report when it gapped up in April, and then price checked back a few days and held the gap support in that $58, $59 area, that was warranting, that's my typical earnings gap play. So I jumped on board that in early May around $58, $59, rode it up all the way to June high around 67 for a nice gain. And I recently had gotten rid of it at the end of June just to clean it out of my swing portfolio. But overall, you take a look at this price action here, holding the June lows and holding the 50-day moving averages. It's only sitting, what is that, about 5% right off its all-time highs. Railroads have just been on fire over the last couple of months, just really strong constructive price behavior. I would give this one the benefit of the doubt and say it's going to make a pop back up towards those 67 highs. Now, obviously, what's nice is that you do have a critical support here with the 50-day moving averages in that June low at 63-ish. So if the report's not well received and prices start tanking below 63, well, then you might be looking maybe as down near the $60 area, back near that April gap, and things get really out of control and they really disappoint you. You got the 200-day moving averages around 58, 57.
All right, next up we're going to be moving over to Interactive Brokers, IBKR. Which, again, some decent expectations given the moving in volatility. And perhaps most importantly here, it's coming up to test its 200-day moving average, which it recently broke below for the first time. You'd have to go back towards June of 2017 since it was trading below its 200-day moving average. It fell below that on July 5th and has since been able to recover, climbed above its 20, and now it's testing right at the 200-day coming into tonight's print. So again, some higher expectations for it, given some of the decent volatility that we've been seeing around, but this 200-day should certainly play a key role in it.
Yeah, for sure. I mean, this one back in 2017 and 2018, I think it made the emerging growth focus list at one point, and I think it even was popped up and on the liquid momentum focus list based upon all that relative strength it was showing. Obviously, it's sitting about 23% off the all-time highs just from about 2 months ago. So holding the $60 area, getting back above the 200-day moving averages, real constructive action here. It helped that Schwab had a good response to its earnings report this morning, and that's also gave a little bit of a boost to TD Ameritrade as well as E-Trade. So yeah, potential, you're talking about a stock that really got maybe way too far ahead of itself over the course of the last year and a half or so. So a 20% correction, there's definitely people picking it up down here. Definitely looking for some potential upside, maybe back to the $70 area.
All right, next up we're going to roll over to United Airlines. Obviously we had those Delta results out last week. United Airlines has been able to move back above its 100-day and 50-day moving average. Obviously, people are going to be keeping a close eye on the revenue and cost trends. One of the headwinds that Delta was seeing, of course, was the lowering of its guidance in reaction to the higher jet fuel costs, which should also factor in, of course, here for UAL. However, Delta has been able to hold up pretty well. It's trading around that 51 area. It's actually hit a post-earnings high of 51.50 today. Given the weaker results and the weaker guidance, it's definitely what you'd like to see for a more constructive bounce for Delta. And now we got UAL coming down the pipeline here. They've been moving higher since the Delta report got up to that 72 area, coming up to some potential resistance in that 74 to 75 level. Obviously, again, close eye on the revenue metrics and the cost per mile metrics as well too, which expectations are relatively down because of the Delta results. Delta is usually considered to be one of the better performers in the group, so that should also help UAL, which is up 7% on the year. Scott, what are you seeing in this UAL chart?
Yeah, this is such a fickle industry. I mean, the stock price action is just so choppy and whipsawish. It looks great for 1 or 2 weeks, and then it gives it all back, and then it looks horrible, and then it bounces back. Overall, I think the sector itself is looking pretty poor. If you look at the JETS ETF or the Index XAL, it's been in a pretty significant downtrend the last couple of months here. So I think it's going to have a lot to prove itself to get out of this choppy range here. You got recent resistance around $75, and as long as it stays below $75, I don't think I'm really going to be interested in it at all. To the downside, you do have a little bit of multi-month support coming in around $65, $67.
All right. Next up, we're going to take a look at ABT, Abbott Labs. We've got some high expectations going into this quarter, but there is a little bit of concern about some FX headwinds. Now, this stock in itself has been trading in a pretty tight range, call it that 60 to 65 area over the last 3 weeks. So the hope is, of course, that this report could break us out one way or the other and create a little bit of volatility. Scott, what are you seeing here in the chart?
I like this one a lot. Choppy year to date, kind of just sitting right where it was back around late January. But it does have this breakout potential to over the $64 area. So I believe that's going to be, would that be all-time new highs for the stock? It's loading up the charts here on a long-term basis. Just locked up. I think it's going to be at least a 52-week high. If it can clear that 64, 65 area, it does look like an all-time high for the stock. So definitely something to focus on, that 64 resistance. If it fails, you got the 200 days below around 58.
All right. Next up, we're going to pull up Granger here, ticker symbol GWW. Again, this is one that's not cheap, but it's got that high short interest, and we've really seen this get squeezed on past earnings reports. So certainly one that we're going to want to keep an eye out on here. Again, estimates are expected to be low. So that's going to be an interesting reaction, because if they don't beat handily, then this is one that could certainly see a little bit of a sell the news reaction. It's been bumping into a little bit of resistance at that 320 area, but overall this has remained in a pretty firm upward trend. I don't know, Scott, if you think that it's kind of broken that a little bit over the last couple of days and moved more into a sideways consolidation pattern, but one that could certainly move a lot in reaction to earnings.
Yeah, it's definitely, that's a high-priced stock, so you're obviously going to have your volatility surrounding it. But, it's kind of slumping, chopping around the 50-day moving averages as of late, but pretty clear resistance the last 3 weeks, right around that 314 area. If it does break down further, well, then you're going to be looking at the July lows around 292, 293 area. Yeah, this is one that's definitely going to be a mover into earnings. This one tends to gap around a lot. I would just kind of sit in my hands and see which way it breaks, whether it can clear this recent choppy range here, either back above the let's go with 314, or if it collapses and goes back down underneath 295.
All right, and then the last one we're going to talk about, Scott, here is Morgan Stanley. Provided a bunch of color on the banks, Goldman, of course, being its closest peer, and coming out this morning with results that it missed its trading revenue numbers, but the trading revenue in total compared to peers was still a little bit better, which, it's kind of surprising to see the reaction in these Goldman Sachs shares. They're pretty fairly valued, and still couldn't really see anybody come in. Now, it did make a little bit of a run, push back towards that 230 area and just below its 200-day moving average. But the reaction in Goldman, it kind of leads me to believe that Morgan Stanley is going to really need to provide a solid number to get it back over that 50 level, and the 50-day moving average at 50.94 and 50, and then eventually the 200-day for a test. So there's some resistance up above it in this 50 area, but if we can see it get back above, then a move back to 55 could certainly be in the cards. Morgan Stanley's done a really good job with its global wealth management over the last couple of years, growing that area, so that should help boost results. But we're going to want to keep a close eye on these trading results and see how it compares to peers, and that's going to be the key. But overall, it's found some support at the 46-47 area, and again, some heavy lifting to go on in Morgan Stanley, but if it could get higher, certainly a name to keep on the radar. I don't know how you're feeling about this one, Scott. It really hasn't broken that downward trend either, which is going to add to that, but this is one that's going to need a really good result in order to find any sort of momentum to get it through some of the tough sledding.
And I guess the good news is that the peer banks have also started to show some of that upward momentum. So it does kind of have this underlying bullish tone already in place here from its predecessors that have reported earnings. So, but overall, this is still lagging. It's down year to date. It's down below the 50s, down below the 200s. There's a ton of overhead resistance. If I would really say, let's get it back above the $50 area. That seems to be, that was prior support. It's a psychological number. If it can't get back above and hold above the $50 area, and that's going to basically bring into play the 50-day moving averages and the 200-day exponential. Yeah, it's got to prove itself. Let's see how strong it is. Let's get this thing back above 50, 51, and then maybe the whole financial sector will be on the mend there. But right now, this is one that I'm just I would shy away from right now. I'd rather be in J.P. Morgan or Goldman Sachs or Schwab or anything else at this stage.
Yeah, and I would agree with that. I don't think you need to be a hero and jump in here. So I'd completely agree with Scott. You want to see this one prove itself before you push in. So 100% on board with that. Well, Scott, we're about to bump up into the open here, so
close.
Or into the close, I should say. Yeah,
long day.
Well, when you still got to work after it, you can call it the open, right? But and we'll jump on with any sort of commentary that we have with the after hours. See if there's any earners that are moving. Not expect anything as exciting as Netflix, but we'll certainly provide any updates we can as we move along, and give any color on the price moves and any opportunities that we see out there.
Cool. Yeah, I'll just run through the market real quick. We got the Dow Jones up about 50 points there, closing back above the 25,100 level. So pretty bullish activity going on there. That's going to be highs above fresh highs for July, actually. And as Gavin stated earlier, the NASDAQ comp, fresh new highs going on there. S&P, this is breaking out over the 2,800 level again. Fresh multi-month high for the S&P. And of course we also have some strength in the small caps and mid caps kind of going up there. Interestingly enough, despite the fact that we saw some of the strength in the major indices here this morning, despite the initial opening weakness, buyers came right in throughout the entire morning, lifting prices higher and then taking the indices, basically shaking off any sort of overnight headlines with the response to the Netflix earnings. And likewise, so pretty bullish activity overall. However, the one thing that kind of bothers me a little bit is I'm looking at the advanced decline line on the exchanges, and that's kind of just petered out and didn't really give us that trend day up accumulation type of reading that I like to see. Instead, it kind of went flatline right after the first 30 minutes of the day. Still was bullish throughout the session, but just more of a flatline approach. And what that tells me is that this market is kind of being led by a few of these heavier weighted names in the indices. So it's just something to be aware of. It's okay to have these heavier weighted names like pace the way higher. Obviously we're looking at names like Amazon, which basically recouped all of yesterday's losses. The Apples and the Microsofts all at new highs, which is fine because that's your leadership. However, it's just a little cautionary. Sometimes the small caps and mid caps and the rest of the market will join the leaders and step in line, but other times it could be a sign that the market's just kind of masking underlying weakness. I don't think that's happening right now, but it's just a little bit cautionary flag going on there. The good news is that kind of offsetting that whole cautionary thing. We did have up-down volume ratio trending higher throughout most of the session and finishing quite strong here. So there's definitely more accumulation on the volume sense in names that were on the rise. So again, pretty bullish constructive behavior today. Stocks that were going higher were doing it on increasing volume. There were pockets of it going on. You really kind of had to find the right sectors and spaces that were moving and participating in them.
Scott, just jumping in here, CSX jumping up, going towards the test of that 67 level that we're talking about. Mm-hmm. Looking like pretty good headline number here. See that coming in at $1, non-gap at 64. No, it's the gap number, so it's $1.01, so it's a 14-cent beat, and then beating by, call it 3% on the top line here, with revenues at $3.1 billion compared to the expectations of $3 billion. They are not providing any guidance, but they are providing a comment. While we remain in the early stages of transformation, I am more confident this exceptional team can deliver on our longer-term outlook. So, reaffirm there on some of the longer-term projections going on, and the key is that 14-cent beat, as we were talking about. There was some concern about higher diesel fuel prices impacting the bottom line, and yet the company was still able to beat. So that's certainly a positive going on there. The company's operating ratio set an all-time company quarterly record at 58.6%. So, that's obviously a positive there. So, good news on the CSX front. Let's see if it could get above that 67, because as we noted in the pre-market, people are a little nervous that could be pointing out towards a double top.
Yeah, good price action here. And just as a general rule of thumb, and I think I've done a webinar on this in the past, when it comes to earnings reports, I always say that they're a wild card and you can never tell which way they're going to gap or what the company's going to announce. But generally speaking, you want to look and see how the stock has been performing over the last quarter or performing year to date. And, at the very least, that a stock like SCX Corp, being one of the top 3 largest railroad companies out there, you look at it and it's up about 19-20% for the year, which, look at the last earnings report when it gapped up, consolidated, and trended higher, and then it's just kind of pulled back a little bit, trading above a rising 50-day moving average. This is a stock that's been accumulated over the last quarter. It's a stock that's performing well. There's institutional money that's coming to the rescue here. So in my mind, knowing that the performance is well, knowing that there's institutional money that's been already at work in this stock over the last quarter, unless that earnings report is completely, awful and just gets everyone caught off guard, you're usually not going to see some sort of aggressive downside gap in a stock, just because there's so much institutional big money that's flowing into it. So just the slightest tweak of positivity, if that is a word, that's in the report that says, hey, things are going pretty well and we expect this to happen, blah, blah, blah. Then yeah, of course the stock is going to get a nice little lift higher, a nice little boost higher. So, and right now it seems like it's right up against that July high there, just shy of it actually. It's 66.69 is the actual July high, and we're looking at around 60. Oh, there it goes, right through it.
Hey, Scott, another one that we want to put on people's radar here, Interactive Brokers, breaking above its 200-day moving average, nice 16-cent beat on EPS. Beat revs by nearly 10%, coming in at $445 million against the $409 million consensus. So certainly following up on Schwab's move here. And, Schwab had a nice pop above its 200-day moving average earlier in the day. Now we're seeing the same out of IBKR, but definitely want to have your eye on this space here, given some of the reactions that we're seeing, because we're definitely seeing some selling pressure coming in to the quarter, and now the results are at the moment helping provide a little bit of a pop to the name. So we'll see if IBKR is able to hold these gains and hold above the 200-day moving average, but one to have on the long radar.
Yeah, it's a good one. I like it. I think it's just it's been a 20% correction in 2 months. Just seems like it's ready to do for a bounce back of sorts. Like I said, if you're lucky, it gets back up towards that $70 area around the 50-day moving averages.
Yeah, so far that's been the most notable names that we've seen moving here, the CSX and the IBKR. A couple of the reports, this Martin Transport, they came out, nice little beat, got a pop on it, but not really a lot of volume there, so wouldn't be looking to get involved with that name at the moment, but just another name that's popped out here that we're keeping an eye out on. MLNX has a nice report going on here, seeing a beat for the quarter by about 16 cents on the bottom line, and the revenues slightly above expectations, and their Q3 guidance looks to be pretty good, as does their FY18 guidance. So I would put that MLNX on your radar as well. This one you want to keep an eye out for. 88 to 90 should be providing some resistance here. It's been providing resistance basically since the beginning of May, but a pretty nice little number out of the company here. So this could be one to test the upside resistance.
Yeah, MLNX is a semiconductor type of stock, I believe, and makes switches and stuff, right?
Let me confirm that for you. I don't have that up in front of me, but we are looking at designs, manufactures, and sells interconnect products and solutions worldwide. So
that's a little vague. They might as well say they make widgets.
It's more along the lines of storage systems and communication equipment. So not a semiconductor per se, more in that integrated circuits area. So like a Cisco would be a good comp here. So, you know, they do the Ethernet switches. What's the other one that competes with Cisco? It begins with an A, the ticker. I'm going blank.
Arista? A-N-T?
Arista, yeah, ANET. So ANET might be a secondary play off this MLNX move here. And ANET's actually been doing a nice... you know, I know you like these these companies that go straight up and then have that sideways consolidation. Yeah. And ANET's certainly been hitting that bill in this 250 to 290 area, call it. It's pretty much flat from its last earnings. But when you see results from MLNX like this, you know, that could bode well for an ANET and perhaps a break back above to try to move back into that 300 neighborhood. So that's a name that we might want to keep a closer eye on here moving forward. Like a little bit more color from MLNX and see exactly how it moves. But if you're looking for a secondary play there, that's the one that I'd be checking out. MLNX is making a run up towards that 88-90 area, but there's some decent resistance up there, so I'd just be wary of that.
Yeah, for sure. You got that 2-month highs there sitting around May and June in that 89, 90 area, but we'll definitely keep that one on the radar for tomorrow. As for Arista Networks, I think there's like 2,000 shares in the float. This thing is like, it's just too volatile. I haven't traded this thing in a while, but in the few times that I did this year, I just felt like, you know, look at the ATR here. The ATR is about $10.
The float is 50 million, and the short interest of Curious is 5.7.
Yeah, it just moves 10 points a day, and if you don't catch it right, it can hurt. So, and it's not. It doesn't really. How much volume is on this thing too? Just tends to be a very volatile name. Gotta be careful with that one.
Yeah. Yeah, but again, you know, if we're seeing a MLNX come out and it's in the same space with a strong quarter, this is one that you want to have on the radar. Now, I would note MLNX just reversed course here. Volume remains very light and choppy, so this kind of goes to the point that me and Scott talk about in terms of trying to trade these after hours. I used to try to do it. I had some success, but honestly, it would probably be about the same as flipping the coin. And you know, you're just better off letting the dust settle, and then you jump in, and you know, then you could play any sort of opportunities that you see at that point, i.e. a Netflix bounce or something along those lines. But trying to play this, really, you got to be more lucky than good, and I don't always have the best luck. So.
Despite the fact that you're Irish, yeah.
Despite, yeah. It's a great misnomer that all Irish people are lucky. But anyway, so we'll continue to keep an eye out on. But I don't know if there's going to be really any more interesting names coming out here at the moment. So we're just going to kind of track the action here, and you know, if you don't hear anything from us in the next 5 minutes, we'll give a heads up that we'll probably just be shutting down the audio, and then Scott and I could get on and do a recap of some of these earnings plays tomorrow, just as a follow-up for our afternoon commentary.
That sounds great, Gav. All right, have a good afternoon.
All right, you too.
Adios.
Adios.